All right, gang. So in this course, we're going to cover support and resistance. Support and resistance is very valuable when it comes to our technical analysis. So as I'm taking a look at the chart here, we're looking at the SPX, the S&P 500 still. And what I'm going to do is I'm going to go just a little further back so we can get a little more mountain peaks and valleys here, because that's the way the stock charts move. Okay. Let me just move this up a tad bit. All right. So to cover support and resistance, what you need to understand is that support. What is support? Support is basically the lowest price in the current trading range. Okay, it's the lowest price in the trading range. What I'm gonna do is I'm gonna show you what that looks like. I'm gonna just let me actually go to pull up my price tool here. So say if we see from this, after this downtrend here, we had the lowest price point here in this little range here. So I'm gonna just click this. I'm gonna just let it go across like that. Okay. And now I have a little line here, and this is indicating the lowest price point that the sellers could sell off at, and we have demand flushing in. So we have a higher demand for the stocks at this price point. What investors are saying, what you learn from this is that investors believe that this is a very great price to buy the stock. So then you get higher demand. Now that demand actually comes in because it's an attractive price for the stock traders and investors to buy this stock at. After it fell from this, this trend here, we have a decline. So after this decline, they're saying, hey, this stock here is at a really good price point, okay? And we like it. So then you get buyers that come in, and the demand stops the price from falling further. So then you have what we call the floor. So support is another word for floors. So you get a floor that's built into there. And what typically happens is that the floor will hold. And if it holds, then price starts to travel sideways. Okay. And at a sideways position from that price point, then what typically happens is that the price will bounce back up and resume its previous rally. So that's what normally happens. So, like basketball, you do a bounce pass. That's kind of what happens. It's kind of like if the stock price is the basketball and you're bouncing off the floor, off the court, and then it, bounces up. So that's what normally happens once, you discover support. Now, support can also be broken. Support can be broken, and we call that a breach of the floor. If the floor is breached, it can fall through it. Okay. That can happen. So if you go back to the previous declines, say this low price point right here, that was a floor, right? And let's just take it back out this way. Once it rallied, it bounced off that floor, just like we talked about right up here. And then it came back to that floor, but then it breached the floor. See, it breached. And that's what we call a breach. Okay. So that is the support. And that support can help you to, come up with trade ideas. If you see the prices solidifying there, then that's a good, bounce play. Now, you may hear traders refer to this as buy the dip, buy the dip. Well, you got to see where the dip is at. You want to make sure that the price is holding. So it is supported here by the demand. The demand is coming in, which is stopping it from falling any further. So that's what you're looking at with support. Resistance is basically what you get here at the tops. Let's go back here at this top point right here. And let's put this chart right there. Okay, boom. So resistance is the highest point that, the traders are basically willing to buy this thing at. They feel that this is the highest that we're willing to buy. That's what you basically see. And then you get, where basically supply stops, slows. And what typically happens here is that the price will actually reverse off of that resistance zone, that resistance level. And you may hear me say that, price got rejected, because you see it looks like it's bouncing, it's touching it, and it's trying to push through it, and it doesn't break out of it. It actually gets rejected, and so it comes back down. That's a clear confirmation that that is a resistance zone. We know where investors are willing to buy this thing at and where they're not willing to buy at, right? So we had that resistance zone, which is the highest point. Okay. And, we have indicators that will help us to identify these things, but no indicators needed. You could just look at the charts and you can see these things, right? And this is cool because what we're taking a look at is in the past. And then we want to get an idea of the future, because a lot of trading, you have to kind of project basically what the stock price is going to do in the future. So we have some tools that's going to help us with that in the next few classes, like our moving averages and our Fibonacci. So we'll cover those things, but you need to understand, the importance of support and resistance. And so that's what I hope that, I was able to show you guys here. One last tip is to understand this. As you see the support and the resistance, you'll see the stock price. What I want to do is let me zoom in on it a tad bit. All right, so what you'll see when you get in closer on these things, all right, you see the price action. Let me make it bigger. We're just looking at the price of the stocks. And what you see happening here is the candle. You see this candlestick here? Up against this resistance zone, we get a wick that is testing that zone. It doesn't hold. It snaps back into the body, but it's testing, because what it's trying to see is basically they're testing to see if the, investors are going to buy beyond this price, and they're not holding. Okay. We don't have enough supply for that. And so you see it test several times. You see that? That's one test, two tests. We got three tests, four tests. That's a clear indication. So the more points that's connected on the candlesticks, that's a clear signal that that's a zone of resistance. And the same thing works for the floors. We had down here at the floor, we had a test down here, one test, two tests. You can count that as a three test because it's right there. Didn't all the way touch it, but it's close enough. Okay. And so that is a, support zone. So the more you see it test, the more significant that zone becomes. Okay. That means that more than likely that zone is going to hold. And again, you get reversals off of those zones. Okay. So that lets traders know, you as a trader know when to get in. Okay. I want to get in right here. Do I want to get in at resistance? Okay. You don't want to be the guy that get in at resistance. Okay. We got a lot of new traders out here, no training. They say, oh, the price is going up. And they don't see that this is a zone of resistance, and they get in, they lose their money. Right. You don't want to be the guy that's buying at resistance. You want to buy at the support. Right. So buy low, sell high. That's still the name of the game. Buy low, sell high. How do you know when to get out? Look at the zone. If we buy here, we ride it all the way up until it hits its resistance, right? And when it hits resistance, you sell off here, okay? And you see the prices moving according to those zones. So the support and resistance, this is a tool that, traders can use this and alone to make trading decisions, right? So I just want you guys to see that. That's really valuable, support and resistance. And, we'll cover some tools, some indicators that can help you guys out with this for future support and resistance zones as well. So anyway, hope you guys enjoy this class. I'll see you in the next one. Peace.